It is a get rich quick scheme. It is. So there were just a lot of lies. There were just a lot of gaslighting going on in this whole trading space. And your mentors will gaslight you more than anybody else. Hello and welcome back to my channel. In this channel, I post trading content, right? In this channel, I try to keep it as real as possible. I post things that happen in my life, in my trading life, and I share with people to find maybe people who experience similar, so we can share thoughts and ideas on how to, bypass or go through certain, speed bumps. So my name is Ghislaine, and thank you for tuning in. Today we're going to be talking about how trading humbled me. We're going to be talking about the importance of spotting reversals on time. For those of you who like to hold trades for too long, you like to hold trades to your targets, we'll talk about that. We're going to touch all of those topics. And then how to spot, the importance of constantly analyzing your charts. Even if you're in a trade, you have to constantly analyze your charts to be able to, demand and supply, we'll talk about that. So don't, just bear with me. I might talk and I'll go off a little bit, but I promise I'm going to get the word out. Just be patient. You're going to enjoy this. All right. So how trading humbled me. Trading basically, was this, from the onset, I was watching videos, I was watching YouTube videos, I was watching tutorials, I was watching mentors and everything. And yeah, they did tell you, trading is not something you just get in and get rich the next day. It's not a overnight success. It's not a get rich quick scheme. That's what they say, right? I got it and I heard it like 2,000 times. But the reality is, you just keep thinking of it like something like that. Because 1 minute you deposit something and then the next minute you enter a trade, the next minute maybe a news event comes out, pop, spikes, 10x, 20x, 30x. It is a get rich quick scheme. It is. So there were just a lot of lies. There were just a lot of there's just a lot of gaslighting going on in this whole trading space. And your mentors will gaslight you more than anybody else. They'll gaslight you. Why? Because it is, they will not call it what it is, but it is what it is. Trading, in some category, in some degree, trading is gambling. It is. Trading is gambling to a certain degree, right? So it depends what you want to call it. But if you don't address it what it is, you will not treat it as such. If you know what trading is, you will treat it as such. Now, when you're gambling, say you want to gamble, you know that, okay, there's a lot of risk involved. You know that this thing would either go your way or it doesn't. So you're going to be very conservative with your risks. You're going to be very conservative with your, whole strategy and decision making. But if you start thinking of it as something which is not gambling, you might think, okay, you have an edge. You might think all you have to do is buy 10 prop firm accounts, stack them on top of each other, trade them, and be making, say, $20,000, $30,000 a month, and you already see yourself driving these expensive cars going around town. That's already you setting yourself up for failure. I can guarantee it. You're setting yourself up for failure already. The reality behind trading, I'll tell you from my own perspective, yours might be different. I've been trading for at least 4 years now, going to 5 years or something like that. There were times where I made money, and there were times where I gave everything that I had back to the market. What does that except gambling? If you're not a gambling addict, if you're not an addict, if you're not a gambler, what does that? There's no edge in trading. You don't have any edge in trading. First of all, right? These markets don't move because you drew lines on the charts and you thought, oh, maybe it's going to bounce here and it's going to move 300 pips. I'm sure, I'm certain. You're not sure. You're not certain. You don't know nothing. First of all, whatever analysis you've made, you think you've predicted the market. You haven't. I guarantee you. You cannot predict the market. The only people that can predict markets are insider traders. People who have information on economic and political and whatever things that affect the market. You don't have that data. You don't have that information. You don't predict nothing. That's just all. You are just there to go with the flow. You just jump in the tide and the water will carry you wherever it's going. That's it. So if you jump in the wrong direction, you're going the opposite direction. You're cooked. So if you view trading as something that, yeah, if I mess up, I'm going to get burnt very, very bad, you might actually have, some sort of advantage. And the only advantage is your risk. Your advantage is how much am I willing to put at this point in time, and where do I look to get out? Now, I'll tell you something from my experience. Whenever I enter a trade and I set a target, the market will always humble me. That means the market might either almost reach the target and drop all the way back, or the market just activates your trade or your order and just immediately goes the opposite direction. The chances of the market always going to hit that your TP that you've set is very, very low. I'll tell you the most efficient way to actually troubleshoot that problem. Now, let's just jump straight into the most efficient way to do it, because I don't like to prolong this video. This video is going to be long. I don't know how to make videos short. Okay, when you enter a trade, if you open that trade, you don't open the trade and you set like a fixed target. You can set the target. Let's say you set the target very, very high, just in case there's some kind of sudden spike, you don't miss out. Right? Cool. We've already established that. But then these spikes will only come during certain hours of the day. So if you're trading during those hours, okay. But if you're not, there's no need for that. Open your trade and watch it. You have to sit there and watch your trade play out. If you're trading, say, the 4-hour time frame, you can go and come back after some time and reanalyze, constantly analyze. The importance of that is you want to know when the market is getting weaker. You want to know when there's a potential pullback, there's a potential reversal. You need to know. Don't just set targets, set stop loss and say, I'm done. You will lose your account, always. I don't care if you're trading 1-to-1. Put 1-to-1, put your target, put your stop loss. Trade over the period of, say, 4 months. You will not make any money. You will not. And then your psychology will come and strangle you. When you've taken 4, 5, 6 losses, guess what happened to you? You start thinking, oh, let me just go all out on this trade. This one probably will work out. It looks like a playbook setup. It looks clean. This one cannot fail. What will happen now? You double down and you will still lose it. Your psychology is going to strangle you to death. So what do? You open your trade. If that trade shows you signs of reversal, even if it has moved just 5 pips, even if it has moved just 1:0.5, not even 1-to-1, close your trade and get out. There's no rule, there's no law that states you have to take at least 1-to-1, 1-to-2. Those rules are made by you. And why I'm telling you this is because you do not make any rules when it comes to trading. You don't make any rules when it comes to trading. You have nothing. You have no power. Zero power. Once you click that buy trade or sell trade, your fate is in the hands of the market, not yours. The only thing you can do is decide to get out or stay. Now let's go to phase 2. Since we've established that, I'm going to tell you guys how to identify reversals. Like when the market is moving, right? You need to know when the momentum is dying out. Once you start seeing those signs, come out, carry your money, come out, get your money and leave. Okay, say we're in a sell trade and the market is crashing. Boop, 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 boop. It's crashing very, very aggressively. We can see it crashing and we're already in the trade, right? We've already moved our stop loss to break even to secure our profits. Very, very important. Please. Very important. If it has moved enough, it's not like when the market's just, it's in profit, you just move your stops. No. The market will obviously come and tag you out. It's going to come and hit just stop loss because the market needs room to breathe. That's the reality of it. You see there's this particular level on the chart. You see there's a lot of back and forth movements there. If you come and put your stop loss right, you're going to get tagged out even before the main move, before the market even starts moving. You're already out. So when you're in your trade and you see that market crashing down aggressively like that, you're going to spot these 3 things, or I don't know, how many at least. First of all, smaller candles are a sign. That's a big sign that the market is losing its momentum. And then you see some of these big candles that will drop and then reject and close with a long wick. That's a rejection. You don't need to immediately close because you've seen one. You need to see multiple. Say you've seen 2, 3 of these candles rejecting a particular area. Don't sit there to see what happens next. Don't sit there to say, oh, it's going to pull back and drop. You are not the one to make that call. Close the trade and leave. If it rejects 1, rejects 2, you're out. Even if you've not met your targets, you're out. This market go on forever. You will still get more trades. You always get trades. These things will outlast you. They'll outlive you. You will die and leave it. You have time. You have time. Get out of the trade. Look for another one. Period. The market was losing its momentum and you got out. That's smart. Now let me explain why. Say you're a buyer, right? Because when the market is aggressively selling, there are people aggressively buying. It's aggressively selling to people. Now let's take this Elon Musk's SpaceX IPO that just dropped. I think 1 week ago, it was 2 weeks ago. When that IPO dropped, the reason why there was a lot of hype around it is because they needed people to come and buy what they were selling. If there was no liquidity on the other end, nothing was going to work. He's a trillionaire because a lot of people came and bought. And then there are people now to sell to. It is a two-way thing, buy and sell. When you're in a sell trade and it's aggressively selling, there are people aggressively buying. That's why it's selling like that, because they are selling to people who are buying it and holding it. Now, when these people have bought, and they've had enough. Say I had $10,000 and I've already bought stocks worth 10K. I'm not buying anymore. I'm just chilling out. And there are multiple other people. There are a lot of people because it is a bear and a bull market. So let's say all the bears, they've bought and they've had enough. Sorry, all the bulls have bought from the bears, right? And they've had enough. Now what will happen is the market will lose momentum. You start seeing it. You start seeing how the candles start. Because people are gearing up to buy. People are gearing up to maybe start. The people who have been the people who were buying from the sellers, they are gearing up to start selling as well. They've had enough. So if I've bought a particular asset and bought it, and I've run out of money, you are then looking for sell trade as a retailer because you don't even have much to contribute to these markets. There are $20, $100, $500 has nothing to. It does not do anything. But we have millions of people on the other side pumping. When they lose interest in that particular market, it's going to pull right back on you. So don't sit there and say it is a pullback, like it's some kind of algorithmic norm. There are pullbacks, yes, but your job there is not to trade pullbacks. You've identified maybe a potential level where price could bounce. You've gotten on the bounce. The market actually did bounce. You were running in profits, and all of a sudden you started seeing signs of reversals, and you sat there and said it's a pullback. Who are you to make that call? You might be right one, two, 3 times, but I tell you, over the span of 1 year, 2 years, you will see that those decisions you made, those small tiny decisions, will ruin you. So when you spot these reversals, weaker candles, smaller candles, when you see these wicks, market reverse, rejecting, when you start seeing opposite candles forming, that's why it's good to have 2 colors on your charts. Don't go and put just 1 color. Having 2 colors, when you see these bull candles popping up, especially in a sell trade, that's a sign. Especially engulfing candles, that is a sign. Get out, hold your position. That's it. That's my lesson. That's what I learned. And then the other thing that I learned is, do not set any targets for yourself. I want you to view trading as a personality, not a job. View trading as a personality. View trading as something that you just added to who you are already. You are a trader. It's a hobby. It's a lifestyle. It's not something that you're looking to use or as your gateway out of poverty. You're going to get rich from it anytime soon. No way, you're a trader. It's a lifestyle. You're embodying the lifestyle of a trader. You just like it. You like the idea of trading. View it like that. Don't change your view. Don't change your perspective. Why? Because if you say you're a trader, a lot of people say they are traders when they're in profit. When they've blown accounts, and they've gone months without trading, they don't even want to carry that title anymore. But that's the problem. If you are a trader, you're a trader. Real estate agents don't sell houses all the time. Sometimes there are real estate agents that will tell you, you ask them, who are you? They say, I'm a real estate agent. But they've not sold a house for 2 years. 2 years has gone by. They've not sold a thing. But that does not make them anything else. They are still real estate agents. Right? It does not change who they are. They are real estate agents. But they've not sold a house for 2 years. That does not stop them from being real estate agents. That's how you have to view yourself as a trader. Losses is part of it. You lost, you are still a trader. You're not a trader because you are printing money from the market. You're a trader because you like the lifestyle. You're a trader because you've chosen to, pick up this particular skill and take it along with you. This is your life journey. This is your life journey. You have a lot of things. You don't have to be only a trader. It could be anything else. I'm not just a trader. I make music. I'm a trader. I do, I'm an accountant as well. I'm actually still studying though. Now, lifestyle. This is a lifestyle. You have to embody it. Don't just call yourself something because you're making money specifically from that thing. No. You could still not trade for 1 year, you're still a trader. You could still not make any money in 1 year, you're still a trader. So it's just mindset issues. This video was just mindset, just touching everything, just touching random things. I did not script anything. I'll hardly, first of all, cut this thing. I'll probably not even cut this video. I'll just maybe do some 1 or 2. I just wanted to talk to you guys directly. Whatever comes to my mind, I just share. There's a lot of things I want to share with you guys. There's a lot of things that I've learned in this whole trading space. I would like to share with you guys. This is not teaching. This is just me telling you what I have summarized for myself over this time. Right? If you like content like this, kindly subscribe to my channel. Subscribe now. Like this video. And then go to the comments and tell me what you picked from this video. What you think you're going to put into consideration. And then maybe what you would want me to touch, like a topic you want me to discuss on in my next video. Because I'm going to try to be dropping videos every day. I'm not making any promises. But it depends how you guys engage with my videos. If you engage properly, I will be making videos. I want to put more of myself out there.